Ajay Bagga joins in to chat about more in the markets. Ajay, it's a little surprising considering up until now we were holding quite okay, completely ignoring what's happening in the Western world. But now we seem to be falling prey. Do you sense that this is only because, you know, there's a truncated week, you've got expiry, or do you sense that maybe this could be the start of us falling in line with the rest of the world?
Well, I think it's more a holiday truncated week, and volumes are low, Aisha. So that gives a bit of a confidence on a low volume basis, and seeing the holidays next week, there's probably been some selling. There was some amount of uploaded selling also. So there was nothing in the last week to have led to margin calls and this kind of concentrated selling that happened. So I really don't know right now, what led to this kind of a basket selling. But more, I would say it's because of the holiday shortened week, the end of the year coming by, probably, smart money booking some profits, taking money home. And on the other side, there are not enough buyers. That is causing this sharp movement. Otherwise, if this had to happen, this should have actually happened December 11th, 12th, and not now. It's like a delayed action fuse going off, and none of us can figure out why that is happening today, not a week earlier.
Right, Ajay, just stay on with us. Sanjiv Bhasin also joins in with his perspective. Falling below the 200-day moving average, it's been a sharp decline. What seemed like an okay start and what has been a decent performance for the better part of this month. Seems like, we are caving in to the weakness across the globe.
So it's a perfect buying opportunity. We think there was this, feeling of why India is outperforming, and certain people may have come and booked profit. But we think this is routine. India is going to be an outperformer, and we think next week globally market should recover. So we are looking forward to a very bright Christmas and a very happy New Year, and we think 11,000 is going to be retested by the end of December.
Sanjiv, what is giving you that kind of conviction? Would you say that crude has been a big factor in this assumption?
All three: bond yields, crude, rupee, the macros, the RBI governor. What else do you want? And at a time when globally there is chaos, so we think that we are in the sweetest spot, and it should continue. Globally, it is overdone. I think the Fed sounded reasonably dovish, but let's leave it to that. The other markets are weak, and I don't want to get into that, but I think we are definitely headed higher. At least on the mid caps, we are going to outperform. So maybe 11,000, 11,200 on the Nifty, but mid caps is where real money will be made in the next fortnight to 1 month.
Well, yes, that's what, Sanjiv is talking about, and that's what, most of our technical analysts are also pointing out and giving trades in. Ajay, I have a question for you, not purely from market perspective, but also from, asset allocation. Now, we have seen that how 10-year bond yield has corrected, and the way inflation is coming down, the way crude oil price has shaped up, there are talks of, RBI probably would now move towards declining interest rate scenario. Do you think investment in bond can be equally lucrative at this point of time compared to equity?
Yeah, definitely. We were recommending more in G-Secs over the last few months, especially post ILFS. There was a move more into gilts, and I think that has played out well. Now, some positions can be taken in the corporate bond funds, in the credit funds as well. Mostly mutual funds have got out of the NBFC pack, so the portfolios are also looking good. That can be looked at. The second order impact, Sid, will be on the bank's treasury gains. The sharp cut in the 10-year bond yield will inflate the treasury gains for all banks. So that also is positive, in addition to what Sanjiv was mentioning, all the positive factors for India. Today, again, I would say it's more low volumes, holiday and seasonal selling that's come in. Let's see if there's follow-up selling on Monday. But we are, at least for now, we are a little, protected from the global sell-off. given the Indian macros. Political risk remains an overhang, but that we saw was very well digested on 11th and 12th December. That's why I said I'm quite surprised today. And the only explanation I have is low volumes, holiday season, and some booking of profits.
Sanjiv, Siddharth here. Just to play a devil's advocate at this point of time, and I understand you have been bullish since quite some time and you remain optimistic on market and why one should not, because macro factors are stabilizing. My question to you from the other side is that what can derail this upside momentum for our markets? What is, any market or every market has a risk attached to it. What is the one biggest risk factor which you can see in forthcoming future or in near future which can derail this market sentiment?
Siddharth, there are 1,000 reasons for negativity, just one reason for positivity, and that is to stay invested. If you've tried to time this market and try and buy on dips, you've never succeeded. So we continue to feel buy the fear, sell the greed. And yes, derailment now, most of the weakness macro is on global cues, on slowdown and this and that. I think that is all overdone. It was all a way of trying to get the Fed to be dovish, which he has. So what would be the undoing here? I see nothing as such which is largely negative. And I can still see that the backbone of this market has been the retail investor who's ready to put his money where his mouth is, and that should continue. We think foreign flows also should be looking very, very optimistically at India. And these type of volatile bouts are always been historically a time to buy. So except for the elections and some bonhomie of Mayawati becoming Prime Minister could be the only apple, which can upset the apple cart. Otherwise, I think it is all gung-ho for India.
Okay. Sanjiv as well as Ajay, thanks very much for joining us with your quick take on the markets. The Nifty's cracked below the 200-day moving average.